Right. I don't think I've got you, Jeff. Uh, Actually, I don't even think I've got.
I can hear you, mate.
Oh, great! I got you now. How you doing? How you doing,
Yeah,
mate?
I've
Sorry.
been. Yeah, okay. Sorry, I've been having difficulties as well. I couldn't see if I could hear. My microphone wasn't working. So it all appears to be working now, which is cool.
Oh, brilliant, brilliant. We are in. Okay. I just realised I haven't been showing my screen for the last 10 minutes, so I'm not sure what everybody's making of that. But let's
Well,
quickly.
yeah, SH1T happens. Sell in May and stay away.
Absolutely, mate. Well, the the FTSE is certainly a selling opportunity. Well, not a selling opportunity, I should say. That the FTSE certainly is in a downtrend, and we should be looking to sell anyway. Regardless of May, the interesting thing about the sell in May and walk away little rhyme, if you like,
Never
is that
worked, except for
well, it's
now.
do you know what? It's only a 50-50 chance. It's 50-50 whether people sell in May and walk away. It actually should be sell in June and come back soon because it's June that is the big sell-off for the FTSE
Mm.
100, not May. Um, so the fact that May has sold off as aggressively as it has, if they were to sort anything out with trade wars and stuff, whatever it usually takes for June to be the weaker month, I think would probably get swept away. Um, and I guess people do sort of take the summer off, or for whatever reason that June is the weakest month in the FTSE 100. I don't know why it would be, but I just think maybe those particular the reasons that June normally is weak may not work out so much this month because May has been so weak, but that will not be the case if we continue with this trade war scenario, and Trump seems to be racking it up and racking it up and racking it up, not just against China. We got
Against
now
his
that
own kind.
yeah, Mexico and are in the firing line, and the EU are in the firing line. It doesn't really seem to matter to him, does it? It doesn't matter who's kind of
I don't know how he gets through a day, frankly. At the moment they're really after him right now. But they've tried and tried. I'm talking about the Democrats.
yeah.
They're really after him right now, and he keeps surviving all these impeachment
Yes, he does, doesn't he?
probabilities and all sorts of things. Yeah, he's an amazing man.
Well,
But we do
yeah,
appear to be. We certainly appear to be in a risk-off situation.
yeah, we do, mate. I mean, when I this you can see the FTSE 100 chart. Let's have a quick look at the chart now because we've discussed the potential for what should happen this month, which it should sell off, and now I am looking for selling opportunities, but this has come a long way, and I'm sure you, as keen a pattern reader as I am, will recognise this pattern, and
Mm-hmm.
and it's an interesting pattern as well. We got a little belt hold bar here, which kind of brings us down to this area. So this is a buy. There's no two ways about it. We are not in sell zone, and what would be interesting and I think quite fascinating is if the market can absorb any more bad news. Has Trump laid his? Has he kind of like dealt his last blow to the bulls just for a little while? So giving the bulls just a little bit of respite and bringing us back up here, because this is an interesting pattern. It is a head and shoulders pattern, but is it in its full maturity? And certainly, if we look at this as the left shoulder, then it's not. It's got quite a. In fact, if we turn it to a weekly chart, it's probably easier to see. Actually, it's not easier to see because the right shoulder is a bit too bearish. But you can see that if we bring in a little square over this side here, which I'm not going to use that color for, and just switch that to yellow, or even maybe gold, then it would really make the right shoulder kind of maturing somewhere somewhere towards the end of the month. Now, I'd be really happy with that personally. That would still constitute a sell in June. However, when we look at this, every bar is every bearish bar is likely, or bullish bar for that matter, is likely to have some kind of retracement, some test of a retracement back within its body. Now this is a May's bar, so some test of the body back with its back, some retracement back within its body. That would kind of leave us, I would suspect, somewhere around about this area here. Somewhere around about 72.28, which is around about 100 pips from where we are now. And in actual fact, I'm talking myself into a trade here, mate, I have to say.
It's okay. You're allowed.
Let me just see what I've got on these weaker time frames. Let me just check a quick headline. I'm just going to quickly check, see if there are any headlines here, because if there are headlines which suggest that we should stay out of here, then I will. But I might well take this trade. I'm just going to buy it up and look for some upside. The only thing is the first trade of the month, and it kind of buckles my. It buckles that, but you know what I really like to do. What I like to do the first trade of the month is go with trend. I don't really want to counter trend before the start. You know, when the month starts. And when we look at this monthly chart here, we got a high up here, lower low, and lower high. So the trend is starting to establish itself as a downtrend. So the monthly, I'd be battling against. The weekly, I think you could still argue is in an uptrend. You know what, mate? I'm going to buy this up. It's kind of I've got to do it on this account as well. So let me just quickly do this on this one. I'm taking that trade. I've gone long. I like the price down here first and foremost. I'm just making sure I don't make a mistake by trading the wrong thing on the other account. There we go. Right. So I've taken the FTSE 100 long. And the reason is you know it's really down to the level. I really like the level. You can see the horizontal line here. It's pretty strong, isn't it, down here? We are all the way down there. And all I'm really looking for is some kind of attempt to get back up. What I will potentially do, there's a level around about 71.82, which is something of 60 pips away. That'll be a pretty good start to the month if I can get there. So because it's caught me on the hop a little bit at these low levels, I'm going to need to plan my exit. I will plan the exit now. We got one there, probably one there. So my idea is that I'm going to go long here, and I'll probably try another long here, which is probably around about 100 pips away. So let's see how we get on here, mate. But I'm gonna, you know, I've gone long. I'll probably try and take some profit off around about 71.80 ish. I'm just gonna have a look, see what's up there. Yeah, so going to be around about the weekly pivot area is going to be where I would short this market. I think I'll probably take a short here. So yeah, the plan is to see if I can get up there. That's the first thing, you know. And I'm not sure what's going to give me a catalyst to get there, to be quite honest. But let's see if we can get going at all this morning. You know, let's see if Trump has finished the clear out effectively, because that's all he's done, isn't he? He's just kind of washed everybody out down here. It's not really down to the numbers, because the numbers are actually pretty good. I don't know if you saw the American numbers last week, but they were okay. We had a 3.2%, I think it was, GDP reading.
I didn't take much notice, I've got to say. No, I didn't.
They were okay. They were okay. You know, the numbers weren't too bad. So the only thing that's dragging us down here really is Trump. Now let's just check the data for this morning. Sorry, mate, I'm on a bit of a. I'm speaking a lot this morning because now I've got this trade on. So
No, you're right, mate. Just tell me when you want a breather.
it's got us started. So manufacturing PMI actually came in as a beat on the Chinese data. I mean, now I'm just trying to find reasons that I could have gone long. So I've gone long at a technical level, but you know, let's see if the data kind of apart from Friday's data, I was aware of that, but now I'm looking at reasons that this will now actually give me the long. Commodity price index. Don't know what the forecast was, but that seems to have come off a little bit, which is probably had a bit of an effect on oil. CPI out of the from Switzerland is not a huge number. Maybe the ISM manufacturing PMI that could help things out if there's some expansion there. Trump keeps his mouth shut for a little while. We basically need some decent data now, I think, for us to get anything going. I'm just going to quickly check the headlines and see if there's anything. Trump upends Britain even before arriving. So there's nothing. There's nothing there.
Done.
Well, it's not. I don't think that's down to him. Actually, I'm going to get your opinion on something. Actually, I think that's down to him. I think that's basically saying that there are people in Britain who are welcoming him, and there's people here who just don't want him here at all.
Oh, okay. Yep.
Right. So apparently Trump called Meghan Markle a. Oh, he called her nasty.
Yes, nasty. I heard
nasty.
that. I actually saw it come out of his mouth. So yeah, I heard that.
Oh, so did he actually say it? Did he? He called her nasty.
Yeah, he did.
Oh,
yeah,
he did. Oh, okay, all right. I wasn't sure whether because I was reading the report and I was thinking they've twisted that a little bit. It doesn't sound to me like he said it, but I didn't hear it. So if he's actually come out and said it, then there's not really any defense he's got.
She, I can't remember what she said about him, but that prompted him to retaliate as only he can, you know.
Yeah. You see, what I was reading is that she'd sort of said stuff about him, and he came out and said, "Oh, I didn't know she was nasty."
Yep, that's exactly what. Well, that's the tweet I saw. Yeah.
Yeah. But I don't know whether that was necessarily calling somebody nasty or saying. Oh, I suppose it is a little bit.
Oh, well, yes, that's yeah, it's kind of a contextual thing. That's very true. But what you said first is exactly what I read.
Right.
I didn't know she was nasty or words.
Yeah.
Yeah.
Anyway, mate. Well, let's get to some other bits.
Is that really going to change anything though?
What's that?
What that pair do? Yeah.
No, I wouldn't have thought so.
I wouldn't have thought so.
No, I wouldn't have thought so. Trump is here now. He's probably not really been welcomed with open arms by any stretch, but he's here now, isn't he? So I think people just have to get on with it. I think it's probably a little, I don't know. He's the leader of the free world. I mean, everybody knows what he is as a character. We know he's a misogynist and potentially a racist. He's certainly sort of like got some xenophobia running through his bones, but I think
he's everything that is every bad ist. He's one of them.
Yeah, he is. Yeah, he is.
In particular, a narcissist.
Yeah, he's a nut. Yeah, absolutely. I mean, it's there's a really funny commentator over here who was sort of saying we don't. People are complaining about everything these days. People can't, you can't get characters like Donald Trump getting away with anything. And he was saying, back in my grandmother's day, she was in Britain looking over her head and seeing actual Nazis bomb Britain. Actual Nazis, not Donald Trump supporters. And I thought, it was quite poignant, actually. People get kind of banded around as, the default setting is to say that you're not a fascist kind of thing. But I think words kind of get diluted down the line, don't they? And it's I'm not saying that Donald Trump's a particularly savoury character, but I think people do overreact to a degree.
Mate, I just can't stop laughing every time I see him on the television. Every time I read a tweet, it's just the same as it's always been. And we've been talking about this for 2 years nearly.
Yeah.
Where they're going to get him. You know, they're going to get him, but they haven't got him yet.
No, and he's a bit like James Bond, isn't he? He always manages to get out. Always gets out of it in the end somehow.
Yeah. Yep.
Very impressive.
And then he just brushes it off. And says,
yeah, it's like nothing.
Yeah.
Yeah.
What was his latest ones? I don't do rumors or something. I can't remember what the Democrat lady said to him, and he said, "No, I don't do that. I don't do that." What a lot of garbage.
Yeah, well, I thought that the Meghan Markle thing I thought was quite funny because he barefaced denied it, didn't he? He basically said, "Nah."
Oh, did he? I don't know.
Oh yeah. He said, I haven't said she's nasty, and then somebody sort of said, "Oh, we've got audio recording." He said, "Nah, fake news."
Of course he did.
Yeah. Yet again, he kind of manages to do the playground tactic of just saying, no, I didn't, no. And if he says it enough times, then he's going to win in the end.
Well, he always wins because he just walks out.
Yeah, he does.
Any meeting that he doesn't like.
Yeah.
Oh no, this is not going well. I'm going.
Yeah. Yeah.
There's incredible.
There's something in that for us, isn't there? Something we should learn.
I'm not sure. I'm really not sure.
Where are we at with you, mate? Anything that you're looking at? Those statistics of any use?
Well, I haven't looked at them yet. I've glanced at them, so I appreciate that, definitely. I can't believe it, frankly, in particular. And let's go to the Aussie. I'm just stunned. I can't get over this. It just makes me think everything I've ever learned and everything I've ever known is telling me that the Aussie should be sinking right now.
Yeah.
And it isn't. It's rallying. I just don't get it.
Well, I gave you the stats on that, which actually
you did
the strongest currency, but then gold is the weakest. But you know what I think is interesting about gold?
Have a look at gold, man.
I'm not gonna put you off too much on this, but I just want to sort of give you a potential perspective on this stuff.
Mm-hmm.
And it's the same as I feel about the FTSE 100. Where is gold? Where are you? There you go. 1309. We're currently at with gold. And I'm going to bring this onto a clean chart here. This is a pretty strong move to the upside. Now, all it needs to do to qualify as the weakest currency is close beneath its open. Yep. So gold could surge for the next week or two. Then we could start getting a little bit of easing in whatever. I think it's going to be about the rhetoric about the trade wars, but all it needs to do, as I say, is close beneath its open. So it could continue to the upside, maybe find a little bit of resistance up in this area, and then give us some sort of reversal bar. Maybe even in July it starts to surge again, but it is potentially very weak here. And because last month was so strong, and it's already kind of come a long way, over the last few months of the first few months of the year. I think that there's a chance here, technically speaking, that we could see some weakness here with some gold.
Oh well, you're going to get a good price if that's the case, because it's just not stopping at the moment.
Yeah, well, it's going to be the same as the
interesting part about that for me is that, and I always say this, I don't know that anybody agrees with me, and I'm not saying it's a proxy. The Aussie is not a proxy for gold, but if you look at the all-time charts, I think Aussie tends to lag gold a bit, but it follows it pretty closely. It's not too far away from it. So that's kind of giving me some form of perspective, I suppose, on the Aussie. But when you're ready, I'll just go through this. I still can't believe it.
Yeah, let's have a look, mate. Let's have a look what you got. I've got a FTSE that I've taken long, currently attempting to break the lows. So I'll come back to the FTSE in a minute. Let's have a look at what you got.
Okay, cool. Now, according to me, I have shared my screen, but at this point, I don't see any evidence of that. Do you? Maybe?
No, mate, I haven't got you just yet. I mute when I give you the screen just so it doesn't keep flicking back and forth, but I haven't got you just yet, no.
Right, okay. Well, I don't know what's going on there. Let me try one more time, I suppose. Screen. Share.
Oh, that looks
there. I don't know what.
better. That looks better. That's better.
Better? All
Gotcha.
happening?
Yep.
All right. Happy days. Now I'm on gold, not on the Aussie. Here's the Aussie, right? Now, let me take you back in time to, we've got a weekly chart here, to here, where I sold the Aussie, right, on the back of the interest rate announcement. Or did I buy the Aussie? I can't remember now. No, I sold it. Sold against the Kiwi. Not sure what that is. I can't remember that trade. But anyway, we were in the second month, the second week, or the first week, first Tuesday of the month here. And widely tipped that the Aussie was going to cut interest rates. Just about every economist in Australia that you spoke to was tipping an interest rate cut. And if I go back 2 weeks before that, before the interest rate cut, you can see that we did sell the Aussie did sell off against the dollar, and I get that. So perhaps that's leading into a potential interest rate cut. Thing is, they didn't cut the interest rates, right? And this was that day. So what happened was the Aussie rallied on the back of that, but only very, very briefly before it sold off again. Now that I didn't understand. And since it has continued to sell off up until a week ago, basically, a little bit more than a week ago. And now it's rallying. Now, guess what? We are expecting an interest rate cut. So do we look at this and say, well, okay, if we're expecting interest rate cut 2 weeks or 2 and a bit weeks before the interest rate announcement, which is here, right? Sell 2 weeks before, sell the week before, and then virtually we go into consolidation. Now, 2 weeks, 1, 2, 3 weeks before, I suppose that was probably nearly 3 weeks before, we're doing exactly the same thing over here 3 weeks ago. We're selling on the back of an interest rate cut, which is almost certain this time. I don't know that it was last time, but anyway, it's almost certain this time. And now, for whatever reason, we're buying that position back. And if this can go to 70 cents again, I just want to sell it. If this can go there before tomorrow, and I can't imagine that's going to be the case, but if it were to be the case, I just want to sell this. And I can't think of any reason other than a potential weakening US dollar why this would be rallying at the moment in the face of an almost certain interest rate cut tomorrow. But again, I have to go back to here 3 weeks ago, where that's probably where the interest rate cut had been priced into the market. So that's the only thing that makes sense to me in terms of Aussie US dollar. But when I go to Aussie Kiwi, a trade which I'm still in from, when was it? Last Thursday. I actually traded this short last Thursday with the interest rate cut in mind. But here's the thing with the Aussie Kiwi. Same sort of thing with, here's the interest rates on, which day of the week is this one? Hang on, Monday, Tuesday. Right. Here's the interest rate on the Aussie, right? No interest rate cut, so the Aussie rallied, as you would expect. And then there was an interest rate cut on the Kiwi the very next day. So the Aussie rallied further, but only very, very briefly before it shot back down, and it sold off ever since. That one you need to explain to me. I cannot explain that, and I don't understand it at all. Why an interest rate cut on the Kiwi strengthens the Kiwi against the Aussie dollar. To me, it just doesn't make any sense at all.
Yeah, I remember this one.
So that's it's the very next day. So both of them had it priced in, basically. Aussie and Kiwi both of them were tipped to have interest rate cuts. Yet Aussie Kiwi has gone down. It's kind of consolidated a little bit in this area, then went up to what I consider to be, I've just been wanting to sell this no matter where, but I reckon this was probably the best price I'm going to get. So this big double top that you can see here is probably part of the reason I wanted to short it at that point, but it's also a support and resistance area. So I am still in that trade, obviously, but I was starting to get the jitters. Why it should be selling off now? It really should be selling off now.
Yeah.
And for the reason that it's not has kind of got me thinking something else again is going on. And what if they don't cut interest rates for a second time on the Aussie? Surely this has got to go, through the roof, up towards 110, one would think. So, yeah, I'm a little bit confused. And then I look at things like where's the Forex Factory? Over here somewhere. Let me drag that onto the screen. And I look at things like what have we got? That's today. No, where's that? Last Tuesday. Nothing much happened there last Tuesday. But last Wednesday, we had no Aussie news. There was Kiwi news, which wasn't great. I thought there was all news last week on the Aussie and the Yuan. Maybe I'm wrong. Here we are. Building approvals, a miss. Private capital expenditure, a miss on the Aussie. Budget release, I think that was about neutral for the Kiwi. I'm not 100% sure on that. The next day, Friday, we had Yuan numbers, a miss to the downside. And as we know, when the Chinese sneeze, and in particular in a manufacturing point of view, that means less imports from Australia, and you would think that's got to be bad for the Australian dollar. Not happening. The Aussie dollar's rallying. And I, again, just do not understand how on earth this could be happening. So maybe I just need to take a holiday and come back in a month's time and say, well, hang on, let me reboot my actual trading understanding, or my understanding of markets, and go from there. But really, I just cannot understand why the Aussie against the Kiwi is not sinking. It doesn't make sense to me.
Have you done any searches on this? Because that's sometimes the only way, to get an opinion on it. I might do a quick search for you now.
Yeah, no, I haven't done any searches on it, but I tend to trust my own judgment mostly, and try not to be swayed by others. But it is nice to have opinion that's, if there's something that I'm not seeing, and clearly that's the case, there's something I'm not seeing. So back to the trade, I'm second guessing myself here and thinking, well, what if they don't cut interest rates? If they don't cut interest rates, this is going to here tomorrow. That is on the Aussie.
Yeah.
Or should.
Yeah, absolutely. Absolutely. So it's technically speaking, with that, I suppose the 1.0, well, it's around about where we are now, isn't it? You'd be looking for something of a bounce here.
Well, I'm not. I don't want it to bounce at all. I want it to go to hell in a handbasket, where it should be going at the moment, because of the interest rate cut tomorrow. And the technical indicator agrees with that. This is wrong. This is crazy candle as far as I'm concerned, but it's there, and you can't ignore that double top. And technically, I've got a lower high here. It's not a great candle to trade, but there it was.
Yeah.
So no, I expect this to go to here at least, and thereafter I'm not 100% sure anymore, because I'm not reading what's happening fundamentally properly, or haven't been to this point. I'll put it that way.
Yeah.
Maybe I'm now coming. Maybe it's now coming home to roost. I don't know. This just looks like a short to me. So interest rate cut tomorrow. Why wouldn't I be short? I have to be short at the moment on that cross. So I guess I'll leave that one alone and talk euro, shall we?
Yeah, I mean, looking at that Aussie Kiwi, I think the opportunity on that, just very, very briefly, is when it kind of got, and I'm looking at the daily charts up here now, because I looked at this the other day only because I actually had my technical setup on this, but you'd kind of want to short it when it hit these highs, wouldn't you? Let me just see what.
Well, that's when I did. Yeah.
Oh, you got in. Look, you got in short.
I'm in. Yeah.
Oh, nicely done, mate. Nicely done. Well, that can't be too bad then.
Well, like I say, I'm starting to second guess myself because I'm not reading this cross very well.
Yeah, but technically speaking, I think that's a good shout, isn't it?
Well, if you're not prepared to take that, then probably you're not prepared to trade at the moment.
What's your take profit area?
I think I've already taken first profits last week.
Yeah.
I have to have a look at another account to tell you that. Hang on 2 seconds. Aussie Kiwi. Okay, see, I took profit at 20 pips. Where did I get in? 106.24 I got in. Let me show you. So I got in there, 106.24, and I took profit at 106.05, which was about there somewhere, I think, on that low.
Nice entry.
On that low. My second take profits.
I mean, was there any?
I'm just free flowing now.
Your setup for the entry, was it just seeing enough weakness up there that it would suggest it's time to take? You got your trade line. You got a slingshot set up there?
No, not really. It was pretty much a discretionary trade.
Yeah.
And I can't even remember what I took it on. Maybe the daily bar.
Because that weekly pivot looks like a bounce area, doesn't it? Not only because of the weekly pivot sat there, but also because of price. Now, I'm going to just do a quick. I'm going to put up a quick fib on it as well. Yeah, it does kind of suggest that the around about the 1.059 area.
Yeah, getting close to a bounce point now. Yeah,
it does look like that, doesn't it?
Sure does. But I'm not going to take any profit there.
You're just going to let it run there. Yeah, we're probably sort of in the zone, aren't we?
I think with the trend line now protecting me, I could think about, and I probably will do this before the end of trade today, is I'll probably move stocks to entry.
Yeah.
Because if they don't cut interest rates, nothing will save. The stop loss won't be anywhere near a good place.
Yeah. That's going to be a good one, isn't it? If they cut the interest rate, then you're going to be looking at an Aussie short, and you may well have just got a price that could give you a decent swing to the downside.
Oh, look, maybe. That's the basis of the trade anyway. That's why I took it. I think there's a good reward on offer there, and I think the setup was valid. So, yep. Another one, mates, that I'm going to change. I don't know if you're aware of this trade that I took on a weekly chart. You may not be.
No, I don't think I am. I feel like I haven't spoken to you for a while.
Well, it is kind of like that, isn't it?
Yeah.
It's cable on the weekly chart.
Oh, right. Okay.
And it doesn't look as good as it did, but I'm sure you can recognize what I'm trading here.
Yeah, you got like a little inverted head and shoulders.
I do. So what I decided that I might do is just take a long position on a fairly substantial basis, and I've got no idea why this is not showing on this chart because I took it on this counter as well. I'll put it back on in a minute. I don't mind trading spinning tops or near dojies
Yeah.
in decent positions. And I thought that was a decent position. I thought it was a potential right shoulder for
Yeah.
me.
Yeah.
That's proven not to be the case, but it was also pretty clear that we had this trend line sitting underneath us that probably wanted to have a test before we go anywhere. So I totally get that, and now we've probably tested that area. Look, I can't even say that I'm bullish at the pound, because that would be a brave call at the moment,
Oh,
given all the
absolutely.
circumstances.
Yeah, absolutely.
Um,
We'll get to some little bits and pieces on the pound shortly, but
Yeah, but what I said to all the guys last week, I said, look, if this does turn around, and I'm not saying it will, but I'm saying it could, on the back of something substantial fundamentally being released. And don't tell me it can't, because who is going to tell you that the pound's going to drop from 143 or whatever it was at the time down to 126?
yeah,
Who was going to say that, really, at the end of the day? Yet it put in a double top and away it went.
yeah,
Well, here we have a pretty substantial double bottom. We also have a potential, well, we have a left shoulder and a potential right shoulder. So if I notice this, and let's say at Christmas time, I go to unwrap the presents, and the pound found its way back to even here, to 133,
yeah.
which doesn't look to be a silly place, does it? To be fair,
No.
when you have a look at this chart. And I'll say, well, shit, that's 700 pips. I could have got that if I'd only taken notice of this chart pattern.
Yes.
And then if I wake up next Easter and it's up here
Yeah.
or here,
Yeah.
even,
Yeah.
I'll say, holy snapping duck shit. Why on earth didn't I risk 210 pips
Yeah.
to get 1,380 pips?
I'll make you right, and also that could actually, in October while we're in Bali, you might be the only man around the table that is long the pound and enjoying some good profit, because actually Bali is going to be the date. That's the withdrawal date. It's Halloween, isn't it,
That's
this
right.
year?
Yeah,
So
absolutely.
so you might be the one man sat around the table that is long the pound and close to a deal at that point, with the potential for it to go longer if you're going to hold it for that long. I mean, would that be a possibility?
Well, I was going to say, and then what if I wake up the Christmas after and we're up here?
Yeah.
Wow. There's what? Let me measure how many pips that is. There's my entry down here, wasn't it? Down about there somewhere. There's 3,700 pips for the sake of 220.
Yeah. Yeah. Yeah.
Bugger! Why didn't I do that?
Yeah.
And that's what I'd be saying. I'm
Yeah.
not saying for 1 second it's going to happen, right? But what I am saying is, when we look back at just about any chart, you're going to find that there was a technical reason
Yeah.
to take all those pips at some stage. That's all I'm saying.
Yeah.
And I see that as a potential here
Well,
right now.
have you got an entry here? Because looking at this pound, actually, right now, if we're thinking about this on a shorter term time frame, yes, we're just running into this weekly chart here, but this is a little channel to the downside. Really, really, really clean, I think, as well. We got a pretty decent touch there, slightly above, but not really. Decent touch there. A bounce at that particular point. I don't know what that would give us in the kind of way of a channel. Yeah, pretty good channel, isn't it, down there?
Looks okay.
I don't know where our measured move lies. Let's have a quick look. Yeah, there's breakout there. So that takes us beyond the weekly pivot. That takes us right the way up to 126.85. Into this kind of area here of some potential resistance, but you'd suspect that resistance may actually just cause the pound to come back down again and bounce off the weekly pivot, and then you're really off to the races, aren't you? If you can get to this point, a retracement and then a bounce, then you're in really good shape.
You are. And look, I don't know how many times we've had this discussion over the past 3 or 4 months. We just continue to say look, the pound is extremely good value.
Yeah.
There's no question that the
Yeah.
pound is very, very cheap right now. That's not going to make it rally, but there will come a time, in my humble opinion, where people will start buying the pound.
Yeah.
For whatever reason.
Yeah.
Even if it is just because it's cheap.
Yeah.
It will
Yeah.
happen. And
Well,
it's funny what can happen once momentum begins, you know.
I
Really
completely
funny.
agree, but what other reason do you buy or sell anything? You know, unless it's cheap or expensive. That's the thing. What the question is, what is going to make it cheap down here, and does it make it cheap down here because the fundamentals at this particular time completely outweigh any of the sentiment that's driven it down here? Because if the sentiment for the pound is weak because of Brexit, but the fundamentals hold up, so even with this potential crash out, it's still a decent price down here, then people are going to start buying it up, and that's the equation right now. At what point does the pound become cheap regardless of Brexit?
Yeah, cheap enough. Yeah.
Yeah. And if you've got a price that's that is effectively stating that it's cheap without Brexit, then you're going to trade it, and it's no different to the FTSE. Now, at this particular stage, the FTSE trade that I've taken is not doing so well, but when I think about this, the FTSE, it's the same thing. At what point do the trade wars get? And this is the whole thing about the whole statement of priced in. At what point is it priced in? At what point does it become so inexpensive that you've got to buy it anyway? Because even with a trade war that goes badly, the fundamentals, the fundamental data can't get so affected that that people are going to be interested in buying stocks again. And maybe it's not here. And you know, but by the same token, with a pound, maybe it's not here. But it's got to be getting fairly close, as you say. I mean, you know, if it's not here, then down here has got to be something, isn't it?
Yeah, it has. And look, I'm not saying for 1 second that it can't go down there.
No.
Not for once. And look, everything that I know about fundamentals, which isn't a great deal, I've got to say, I'm no expert, is telling me that this has to keep going. Sure.
Yeah. Yeah.
You know, and if you look at the monthly chart, you know, we're still in a fairly vigorous downtrend. We've had a decent retracement back in 2016 to 2018 before before it has really gone to the dogs, if you like. But at the end of the day, going back to, I think when Brexit was announced, no, it was 2016 when Brexit was announced, wasn't it?
No, that's when it happened. Yeah, that's when it
When it
happened.
happened.
Yeah.
When did it start?
Oh, it would have been the year before because you know, Cameron would have effectively, you know, said to Barney, might have been a couple of years before, actually, because when he came to office, I think one of his pledges was to commit to an EU referendum. So it might have even been a couple of years before, a couple of years prior. So yeah, 2014, and when you look at 2014, that's when the pound really did start to move to the downside.
Began, yeah, July. Yeah.
Yeah, I mean, I could give you some further data, because a lot of the Brexiteers have effectively been saying that the pound has been moving steadily to the downside. So it was effectively overvalued anyway. You know, regardless of Brexit. Brexit didn't help, but well, that's the understatement of the century, actually. But
just about.
but I'll show you the movement on the pound. So if we look at, let me get rid of that. If we look at this, we got foreign exchange. USD, here we go. This is the pound versus the dollar. And I'll just blow up this area here, because this is where it sort of really started. So you know, we were almost at 2 to 1. In fact, we were at 2 to 1 back in back in 2007, just at the end of 2007, and then we did really sort of like take a huge plunge to the downside during the financial crash. But the pound, I suppose, realistically, it was 2014 because it was getting fairly stable at that point. At that point, you know, that the pound could have actually taken off through these levels. We're in a little bit of a channel for quite some time. You know, for 4 or 5 years, we were in some sort of channel, and the pound could have actually started to burst to the upside. But it'd be interesting to know when he announced it, because if it was any time around July of 2014, that would account for a Brexit
Yep.
sell-off right the way down, and it's come down a long way. I mean, there's going to be people definitely back. You know, if the pound comes back down here again, and we trust you know, anything with indicators whatsoever, then this indicator will certainly start to show that we've got some divergence, you know, along this area. I'm not sure how low it'll come, but the indicator won't come all the way back down here. It just hasn't got the room. So there will be some divergence with the pound if we get this price down here. And I've got to be honest, if it comes down to 122 or maybe even 120, let's say, then I will be buying it regardless as well.
Interesting, isn't it?
Yeah.
It is an interesting subject. There's no question.
Yeah.
And like I say, you know, we'll come back in 2 or 3 years' time and we'll say, well, there was a trade there, no matter where it happens.
I agree. I agree. And you know what the other thing is with the pound is that I think you do have to probably trade it from a longer term perspective if you're going to make money out of this, because if you're going to try and make you know, a few pips really long, and I'm talking about if you're taking the long positions, short positions different. I think you could scalp it, you could swing it, you could do you know, all sorts of tumbles and turns with the pound and make money, as long as you're on the right side of the longer term trend. But if you're going to get a position on this, if you really want a long position on this, a longer term position on this, you've got to be trading the longer term time frames. And if you're going to do that, then the buying opportunity is really, I think it's screaming at us.
Yeah, look, I made that decision probably a little bit too late in the month, last month, where price was very choppy trading on 30-minute chart, and I couldn't find this, you know, a decent entry for love nor money. I found a couple which I thought were decent, and they let me down. So I thought, oh, look, something's wrong here. You know, I'm not talking to the market, or the market's not talking to me. So I thought, look, I'm going to have a look at these bigger pictures, and that's exactly what I did, and that's where I had that in mind. I thought, oh, this is just standout.
Yeah,
it will happen, not necessarily now, but this is not a bad little time to be looking at it. So that's how I finished up there, mate. To be fair.
yeah, I think you're right. I like it. I like it a lot. That would be certainly my call as well. I'll be with you on that. I mean, this, you know, we can talk later on about what's happening in the UK and what might give the pound a bit of a boost. But I think to a degree, it might just be that there's just a little bit of calm. There's really nothing specific anymore. We know that Theresa May's leaving. We know that the front runner is Boris Johnson. There are some other people now throwing their hat into the ring that are actually fairly Eurocentric. You know, that there is one new guy that's calling for a referendum, and he's the only one. The guy that I quietly fancy for the job is a guy called Rory Stewart, and I think with these things that the person that you expect to win, the favourite, if you like, doesn't tend to come out on top. And I think because Boris Johnson is the favourite and he's the one that everybody expects to get the job, I've got a sneaky suspicion that he's not going to do it. He's just not going to get it. And I think it could be somebody maybe even more obscure. It may be a second favourite or third favourite, but I'm looking at somebody quite obscure. And the guy that I quite like at the minute is Rory Stewart. And the reason I like him is that he's a little bit more balanced. Now, that may be Theresa May Mark II, because I think he was a Remainer. But he's got slightly different ideas on his approach. And his approach is going to be about a People's Assembly, which they did throw around before. You know, we had a situation in Ireland with abortion rights, and they put together a People's Assembly, and by all accounts, it was supposedly quite a positive method of finding a resolution. So I wonder whether the People's Assembly might be the way to go, and certainly Rory Stewart is an advocate of that. So I think he could well be a bit of a dark horse in this race, and I quite fancy him. The new guy that's come out is, as I say, he's completely on the other side. So you've got Boris Johnson's, you know, an avid leaver. You've got Andrea Leadsom, another avid leaver. Now, both of those two were in the last last leadership race before Boris Johnson, you know, pretty dramatically withdrew his challenge. You've also got Michael Gove, who was in the leadership race and withdrew his challenge. So you got those two characters. And Adrian Leadsom was in the last two. I wonder whether they're going to look for somebody completely fresh. Now that puts people like Dominic Raab, the Brexit secretary, before Theresa May sacked him. He was the most recent Brexit secretary. He could be in the running. This guy Rory Stewart, that seems to have this balanced approach on Brexit, who I think may well have a more decent shout than people give him credit for. Then you've got the first Asian potential first Asian Prime Minister, Sajid Javid, who is also trying to stay with the will of the people. But then you've got this new guy who I can't pronounce his name without reading it, who is an avid Remainer. So he's really the only one on the other side. That might just about get him over the line. That might get him some support because he's offering something different. So it's going to be an interesting race, but really back to why the pound may rally from here. It may just be because we got some calm in the news. We know everything now. We know everything's been laid out. So maybe we stabilize here at least for a little while.
So nothing's going to change until October 31st, as we understand it. It's still going to be Brexit, and at this stage, it looks like potential no deal.
I think what's going to change between now and then is who becomes leader, and I think that will have a huge bearing on what happens with the pound. Because obviously, if the guy that wants to remain, gets the leadership, then I think the pound rallies off the back of that, because he's just going to put it straight back to the people. He's not going to revoke Article 50 by any stretch, but he is going to put it straight back to the people. That's his position. So if he gets into power, if he becomes the leader, then that will be probably very, very good for the pound.
Okay, so yeah, all right. I'm sorry, trying to think 10 different things at the same time.
Well, if you've got Boris Johnson, then that says something different. I mean, Boris Johnson's already said that he's willing to crash out the EU without a deal. So it depends who gets
time,
in.
Haven't we? If they, when is this happening?
What, the leadership contest?
Yep.
I think they're looking to announce it by the end of the month or the end of July.
So that gives them 3 months effectively.
Exactly.
To actually turn things around.
Exactly.
If that is to be the case.
Yes, exactly. Now I'll have to look at when that happens, but that is going to be
really
the next.
That's a massive date, isn't it? That date when that leadership.
Yes.
Or the leader is known. That's going to be a pretty big day, isn't it?
It's going to be huge, mate. It's going to be absolutely as you say, it's going to be massive, because I think at that point we'll know what course the leadership hopefuls will be leading the country through. Michael Gove has come out and said that he would delay Brexit till 2020 to get the right deal, late 2020. So there are nuances on the levers. But
it's nice of him to say. What's the European leaders think about that?
The European leaders, I don't know. I don't know. So you've got now. This guy's not being listed. I've got the list of the Tory leadership candidates here, and interestingly, Boris Johnson's favourite, Dominic Raab is second favourite, Michael Gove is third favourite, and Andrew Leadsom is fourth favourite, and all of those four are pretty hardline Brexiteers.
Okay.
and then we start to get a little bit more fluffy. Jeremy Hunt, Matt Hancock, Rory Stewart, Esther McVeigh is a hardliner, but the next three are kind of a little bit more fluffy about how they leave. And then you get a few more kind of fluffy guys towards the end. Oh, here we go. Sam Giamaya, I think his name is Sam Giamaya. I'm not sure how you pronounce his name because he's got an African surname and I struggle with it, but it's Gyimah. I think it's Sam Giamaya.
Okay, cool.
And he's 200 to 1.
Is that all?
He's 200 to 1, yeah. And he's the avid Remainer. He's the only avid Remainer. Yes, sorry, mate. What are you gonna ask me?
No, that's okay. When I'm looking at big picture stuff, I tend to go to bigger picture numbers and things to back this up. National debt to GDP ratio. What do you think of that as an indicator towards a currency's prospects?
Do you know, that's a really, really good question. And I have to say, if I'm looking at that particular metric, then I very, very quickly sweep it away. Because if we were really going on national debt to GDP ratio, the dollar would be in all sorts of problems, would be all sorts of trouble. You know, there is
exactly.
Yeah, I mean, there's a debt crisis looming, isn't there? And I've watched a lot of videos on this stuff, and the videos that I watched were from Gold Bugs, and the Gold Bugs were basically sort of tracking this right back through history, and showing that that when you get this point in a society's phase, then gold starts to become the currency of choice, and the fiat currencies just lose all value. And the particular Gold Bug that I was watching was talking about the Roman Empire and how it happened with the Roman Empire, and literally he had everything. He covered every single point in history and said, when society gets to this point, you know, society goes through these different phases, and the luxury and overindulgent phase is the last phase, and when it gets to that point, and debt becomes, you know, pretty much so out of shape to GDP, then that's when gold will really start to pick up. Now, I've been reading this really for the last 5 years, and I'm sure it's been going on with the US economy from way beyond that. So because of that, it becomes a very difficult metric to have any timing with. I think it's fascinating and I think it's important. But have you ever seen The Big Short?
Oh yeah.
Yeah, so I think it's a bit like that. You know, I think you know, you've got a guy who's done all the maths on what happens with a debt crisis. He puts on The Big Short, and then he's just sweating it out because he can't understand why it isn't moving. The recession that we had in the early 90s, I think it was an awful debt crisis, and yet the stock market rallied. So I find it a really kind of a really fuzzy metric to you know, and a really fuzzy kind of number to have to evaluate. So I don't pay it too much heed, if I'm completely honest with you.
Yeah, no, I know what you're saying. You don't want to be that dude sitting there sweating and sweating and sweating, waiting for it to happen, and at the 11th hour and 59th minute, it actually happens.
Yeah, exactly.
But yeah, maybe that's where I'm at. Maybe it is. Maybe I'm just, I don't know, am I ahead of myself? Maybe I am. We'll
I mean, you're absolutely right, but I don't know. I think there's probably quite a lot of people that are feeling the same as you. Julian's one of them. You know, I've heard Julian talk about this time and time again, but actually picking at a point where it actually starts to the house of cards starts to topple.
Make the difference.
Yeah, it's really difficult because that's what it is, isn't it? I mean, the US economy and the dollar is literally just a house of cards. It could be the trade war. You know, maybe that's the trigger.
Maybe he puts himself in such an incredibly toxic,
Vulnerable.
independent. I don't know. There's all sorts of ways you can look at that, I suppose.
Yeah.
But if they are truly, you know, able to self-sustain themselves, they'll be okay. But there will come a time, in my humble opinion, and it may not be whilst I'm alive even, but I don't believe the US can remain the major economic force that it is. I just can't believe it.
Agreed.
Anyway.
Yeah, no, I completely agree. And as I say, maybe it is the trade war. Maybe it's the fact that Donald Trump is in charge of the US economy, and he does just fight too many battles. I do think he's spreading himself incredibly thin.
Yeah, look, very difficult to trade it though, as we say, and that's kind of, I guess we're kind of here to trade today, and today the only thing I see is well, I do have a couple of positions actually I'll share with you. They're not terribly exciting at the moment, but let's go have a look. I've got I'll pinch the screen. I've got a long on Euro Aussie at the moment, which again is one of my confounding things. Why is this happening? I've got an entry. Shivers. Why is it on this chart? Good question. Euro Aussie. That's pretty crazy. Oh, anyway, I'm sure I placed the order. It's definitely on my other accounts. My trade line's coming through here. Just through that high. Now, I actually traded this on Friday. Same scenario, which was using this line, I think. No, that one. Might have been on a smaller time frame. Was on a smaller time frame, and I had a break and retest with this bar here. Break, retest, and I traded long here, as you can see, and got burnt. I think I had my stop in the wrong place, perhaps. Certainly, it looks that way at the moment. But I've re-entered the trade in a similar position above this bar here. So I'm actually using the entire bar here. It's a pretty big bar.
Yeah.
But I'm prepared to trade it. So the entry is here at 1.6136, and my stop is underneath this candle. Interestingly, we've now come down to this trend line again, and I may look to move my entry, or yeah, it looks interesting here. Not that interesting though, because this candle's got a big tail on it that I didn't see before. I'll stick with what I've got, but there may be an opportunity to trade this from a far better price. And if we get a break here, consolidate at this level, and then get back above this trend line and retest it from above, in particular, if we took out the pivots and got an entry above here, that would be a far better entry for me. So I'll be looking at that, and if we do get that particular scenario, I'll definitely look to move my entry. The other one is euro dollar, and euro dollar, same direction, long. Euro dollar put in a nice little high test bar there for me a few hours ago. This one here, where it came back below the monthly pivot. Now, I know there'll be a heck of a lot of people saying, wow, there's a short right there. And I couldn't blame them for thinking that. That's a perfectly acceptable thing to do if you're trend trading. And after all, we are trending short right now on this cross. So I can totally get why you'd want to go short here. I don't, not least of which because we're trading straight into the weekly pivot and the daily pivot. But if you've managed to take that trade and get some profit out of it, happy days. I rather think there's an entry above this candle here. The problem now I've got is, where do I put my stops? I would really like to have seen the daily pivot tested with this bar. That would have been good. Then I would have been far more confident in putting my stop loss probably underneath the weekly pivot. And that's probably where I will put it. What have I done on the other account? Just hang on 2 seconds. No, I've actually put it underneath the daily pivot. So my order on that one is long at 1.1191 which is pretty much there. And my stop loss is at 38 pips underneath there. So that would be 50, what did I say? How many? 38, 53, which is about there. So if you want to follow that one, that's where all that's happening. I'm going to take profit at 30 pips, which is 21. Right there, just before these highs. And my second take profit will be just before the extreme highs on your screen, right about there at 112.54. That's my second take profit, and then I'll just let it run from there. So I'm going to take a third off here, and then just let it rip if
Right.
that happens to be the case. So
the
that's
euro dollar, Aussie euro dollar, is it?
Euro dollar. Yep.
Euro dollar. So you're taking a long on that.
Yeah, and on Euro Aussie. If you want to follow those, or if you're thinking about trading those, you would want to aggregate your risk because it essentially could be the same trade. It may not be the same trade because of the circumstances with the Aussie tomorrow, that being interest rate announcement. So just be aware of that. If you are going to trade Euro long, you don't want to go too mad because, look, at the end of the day, we are in a bearish trend. We look to have maybe formed a base, and I can definitely see targets above us without question. But you are trading counter trend here if you're trading, so just be aware of that as well.
Yeah, the Spanish PMIs have come out weak. Italian manufacturing PMI have come out weak, but slightly better than expected. Just waiting for this this French final PMI and German PMIs as well.
Okay, cool.
A few announcements today. Got quite a few announcements.
Were there?
Yeah, I mean they're all kind of they're all yellow folder news, but
they are all yellow, yeah.
But there are, but you know, but the thing is though, that this stuff I find really important because we end up kind of ignoring the yellow folder news, but in many respects, the yellow folder news is what builds the red stuff. You know, it's almost like these are our small term timeframes, if you like, or maybe they're the I suppose they're the small term timeframes, you know, in relation to a chart. So these are important. You know, when we're looking at the manufacturing coming out weaker than expecting, it's telling us that the eurozone is either weak or weakening. Your Spanish PMI is coming at 50.1, so only 0.2 away from contraction there.
Yeah.
Yes, it is. Italian manufacturing PMI actually only 0.3 away from being flat. So that's pretty good. You know, the previous was 49.1. We're now at 49.7. So maybe there's a little bit of balance there. But you know, so possible green shoots. You'd certainly have to see that on a chart to see how that looks. Still looking pretty bad. French PMIs are due out. In actual fact, they should be out right now. So let's just check what they are. 50.6, so that's in line with expectation, and in a few minutes' time we get the German manufacturing. Now, that is going to be obviously probably more of a key metric, the final manufacturing from Germany, because we're talking about the euro. We're not talking about it's Italy and Spain and France individually. We're talking about the euro, and obviously with Germany being the big player, then they really do need some expansion in their PMIs, and we've just seen a steady decline since January 2018, which I'll bring up over here. We're just looking at this steady decline in PMIs, and it's still going down. You know, it's not like it's building up. So, do we get some kind of green shoot of recovery in this next one? But as I say, I think these little metrics are actually pretty important because they do build the overall picture. final manufacturing PMI will come in weaker if Germany continues to show contraction here, regardless of these others, because of the heavier weight that Germany has on the euro. So yeah, really important numbers. Manufacturing PMI from the UK as well. You know, this has been steady. They're looking for a slightly weaker number, but as long as it's above that 50% line, then that may well give the pound a little bit more of a boost on a Monday. You know, it's only small, but it does, as I say, all these numbers and these metrics are numbers that the Bank of England or the respective national banks will be looking at to ascertain whether they can raise interest rates. Now, we know that the main numbers are going to be inflation and employment data, but ultimately, this is the stuff that drives the employment. So these are important numbers. I think we just have to kind of put them in our back pocket rather than making them front and center. But you know, these do give us kind of a soft idea of where the economy is going, and so far, it looks a bit bleak, doesn't it?
Yeah, look, a lot of pennies add up to a pound too, you know, and from little things, big things grow. You can throw a lot of, you know, analogies at it if you like.
Yeah.
And you're right, no question. If they're all pointing towards one direction, you've got to be taking notice of that.
Yeah. Absolutely, and the euro is you know, it's a concerning currency, isn't it? Because it really does need to start picking itself up off the floor. It just hasn't managed to catch any kind of bid whatsoever. We got a level there that broke through, retested, and it's on its way down. Where does that lead us next? And I suppose maybe we're looking at this. There's a little horizontal level along here that people are going to be interested in, but it's certainly not going to boost up there for too long if the numbers don't match. So we could be all the way back down here before we really start to have any value in buying the euro for longer term.
Yeah, look, I'm keen. As you say, longer term, different story. I'm keen to trade off the bottom here right now, but I'm really looking for a higher low, and it really hasn't given me a massive one. But I think we're in the position where we could form that, and that's why I'm a little bit bullish on the cross today.
Yeah.
Daily pivot's in a perfect spot for that. That's why I wanted to see that daily pivot tested. That would produce a higher low. We've already really got one on the back of the double bottom from 26th of April to 23rd of May. That was the double bottom, and we got a higher low. When did we get that? On 30th. When was that? Thursday. So that occurred on Thursday, of course, at the wrong time of day for a lot of us. Yeah, it's all good fun, isn't it? So I'd like to see another higher low. That's all before I actually bounce right into this. But I think the little intraday trade there is okay.
Yeah.
That is my my summary of that. But yeah, look, it is in a downtrend. You know, there's no question.
Let's just have a quick look at those German numbers.
Gold's still going nuts, man.
Yeah, German numbers coming in line with expectation, and no flourish to the upside. Let's have a look at gold very, very quickly before we wrap up, and then we'll just I'll just give you a little rundown of the FTSE. Oh gosh, yeah, gold is absolutely flying, isn't it?
Yeah.
Absolutely flying. It's really well and truly on its way. Little gap and go there by the looks of things as well. So
oil's come off big time last month again.
Yes, it has.
I guess if you look at that chart, you know, if you look at the monthly chart on oil, you know, put in a decent retracement on the big fall through October of 2000 or through 2014. It took a long time to get back to the 75-cent mark, but as soon as it did, push.
I mean, you know, it really is one of those things as well, isn't it? You don't really need to be any kind of rocket scientist to see what happened with oil. It's broken through this area here. It then broke through this area here, not able to break through this higher area here. So, you know, now it's coming all the way back down again. And I have to say, this would be my first point of call for buying oil back again. You know, 52 52 spot, I think, is a decent price to see what happens here with oil. Maybe you're looking at this weekly chart giving you, if you're looking at these in a longer term picture, maybe you're looking at the weekly chart giving you something of a reversal, maybe something of a hammer down here, and seeing if it can actually hammer out a low before it starts to pick up. But I like the price here.
Yeah, it looks okay.
Check
Absolutely.
that on the monthly, and the monthly probably gives us a slightly different one. Let me just see what's where this drops down to. Is it? Well, there's a few here, isn't there? It could come all the way back down there, I suppose. But there is this would be certainly on the weekly chart. It looks like a potential first point of call. I would say that on the monthly we could be looking at a shade lower than that, maybe running into that line. I'm going to pull up a fib on that as well and just see what that looks like.
If you actually study that chart, though, you know, it looks rare that once oil starts to go,
Yeah.
That it responds quickly. It takes a little bit of time.
Well, in that case, we could well be waiting for the weekly chart. But look what we got here, mate. We got a pretty nice, really the last grab of the fib to come back. And so that's the 61% retracement there on the fib. Let's check this one as well on the way through.
What's that, daily?
This is the weekly.
Right.
Yeah. So again on the weekly, it was the 61.8% retracement that stopped oil's price in its tracks and then started to move it back to the downside. Paul took this setup, and he took the setup on. I was with him when he was trading this. He was looking at this on the monthly pivot, all the way up here.
Oh wow!
Yeah, so he got a really nice run, and I'm not sure if he's still in, if he's taken profit. I'm not 100% sure, but a decent run down, isn't it?
Yeah, hell yeah.
So he got a really nice trade there. I think he might have got in somewhere around about here, but you know, over 100 pips, and I don't think his stop loss was much more than 20. So he's you know, if he's managed to stay in right to the end, he's got a decent 5-1. I will wrap you with a FTSE if unless you got anything else, mate.
No, I'm done.
So let's talk about the FTSE. Now the FTSE, I've taken a long on the FTSE, but so far it is not playing ball. But let's have a look at what the idea on.
Christo's saying we can't see your charts, and that certainly appears to be the case.
Oh, my chart's here. Okay, it's probably because I gave you the screen.
Sorry, Christo, I just saw that.
Here we go. So if you can't see my charts, I'll give you a quick run of what I've been talking about for the last half an hour. Talking about these numbers first and foremost from the euro. Spanish PMI is coming in weaker than expected. You guys can see this anyway, I know, on your own screens, but Spanish PMI weaker than expected. Swiss PMI is a different beast because it's a different currency. The Italian PMI is slightly better. French PMI is in line, and German PMI is in line. So that probably would suggest that this will stay pretty much flat. We're going to be looking at manufacturing PMI from the pound later on, particularly because Jeff has got that long in the market. So we'll have a look at.
That'll be there for a while, mate.
That'll be there. Yeah. I mean, I don't think that will necessarily move it because Mark Carney's unlikely to move before we get all this Brexit stuff sorted out. But it will be interesting because that's going to build pressure on the pound's upside move if the numbers continue to be pretty good, and we get some a Tory leadership contest, which people like. The other thing we talked about was gold, which you showed, and WTI was the other one that I was just saying that Paul entered while we were in Singapore, and this was his WTI trade. He came off the monthly pivot and has managed to grab. I know he grabbed this move. I know for a fact he grabbed this move because I was with him when he was closing up the trades, but I'm not sure whether he left some on the table, so I'm not sure whether he's still in or not. But he took some profit here, and he may well be taking profit here. But it certainly looks to me that oil now would be a buying opportunity. It's certainly in a buy zone. It's not necessarily an opportunity. Maybe that's the wrong wording, but it's certainly in a buy zone down here. and you're just waiting to see whether this weekly chart can give us something of a reversal bar, giving us a hammer here to take us forward. And then I was just putting up the fibs on this. So you take the fib from the high to the low, and that was our turning point. 61.8 retracement. I'm sorry, I'm going kind of fast here because we're over time. 61.8 retracement was the turning point previously, and then we look at this again in the opposite direction. 61.8 retracement gives us exactly where we are now, pretty much.
Cool.
You know, within a pip or two. So we're looking at that potentially for a move back to the upside from here. Now let's finish with the FTSE. Now I've taken a long in the FTSE, and the long has been brushed aside straight away. Didn't get to Bitcoin, mate, which we'll have to talk about tomorrow, because I know somebody that's trading Bitcoin, and I said to them it is probably time to lock in some profits, and we'll discuss that tomorrow.
Yep, sure.
So I've taken a long in the FTSE here. Now this doesn't look like it's too far away from price, because I'm looking at a weekly chart. But let me show you the chart that could make you panic, and that's this one. This is the hourly. It's quite a way away from entry right now, which is not the best. We do see just a little bit of buying now. Now I'm just going to switch it onto the other charts here. I'm not too concerned right now. I'll look for another long a little bit lower down if this doesn't pick up here. Looking at the shorter term time frames here. This is the 15-minute time frame, and nothing to gauge from this. It's just sell off, attempted strength. Now, this is a bullish bar in many respects, because what's happened here is that you end up getting a hold. So, you know, price starts at the low, pushes to the upside, pushes down, but it holds, and that can have bullish connotations. Normally with this is an inverted hammer. Normally with something like this, you would look at a break to the upside and a close above the high before you would consider it a buying opportunity. But the fact that it provided a hold would be an area that you'd then be a little bit more confident with a stop. So, but when the bar closes beneath, then obviously that sweeps away the bullish connotation with it. So that one got swept away. The 15-minute chart is currently just starting to pull a little bit down here. And when we look at the 5, we just have a few bars which suggest that that the selling is over. Now I'm going to switch to the 1-minute chart. I don't really want to kind of confuse people that I'm trading this, but just so you can see that the information is starting to suggest that we may well have some upside if we can take out the higher end here. So taking out 70, 75, which is a couple of pips away from where we are now, then that might encourage the bulls just to come back into play. And then what I will look for is a daily candle that ends near the high. Now, irritatingly, that's going to be my entry. I would have preferred to have got in around about here, actually around about 20 pips above, but that's no big drama right now. I'm not too concerned, because my idea right now is to go, well, keep the long in the market. If this doesn't happen, I'll hit it with another long around about here, which is around about 70 pips below where I am. And if that doesn't happen, then I will have to consider a hedge. I'm just going to check this level here. Yeah, that's no good, is it? So no, don't get me wrong. The short is certainly the trade here. But I've taken a short before. I've taken this short here. I took profit here. Didn't grab any of the others, unfortunately, but I've managed to get one of them, and all I was really waiting for is a decent move back to the upside before going short again, which I will. But right now I'm in a buy zone, so I'm just looking for the longs, just to see if the market can just get a little bit of a boost and start to price in all the bad news that we've had, because at least today is a little bit quieter. So that is the scenario and situation, mate. There's nothing more for me to do right now but sit on this this particular trade. I'm not uncomfortable with it whatsoever. I'm looking for around about 72 or 71.85 ish, somewhere around about that point there. Actually, I'll be looking to see if whether the shorts come back into play, and then what I may well do is take the short, leave the long on and just stop it at break even, and then hedge the two trades out. But we'll see. You know, there's so many different things, so many different ways.
A little bit of water to go under the bridge yet. Yep.
Yeah, I mean it's got to go up there obviously, and but if it does, then there's a few different ways to play it. But that level looks fairly strong, doesn't it, right now? So we'll see what happens there. But yeah, quite like the fact that we're getting a little bit of a boost up here. So as I say, not too concerning at this stage.
Right, bud. Thank goodness we got through a show without any technical hitches.
Praise the Lord. Yeah. No, I've messaged James, and it just seems to sit in his inbox. I don't know how to slap him into replying to me, but he hasn't replied yet. No, I know he's a very busy boy, so I'm not gonna.
He is a busy man. Yes.
Not gonna get too down in it, but yeah, we will sort things out eventually. Oil and gold are exciting. Now, just a quick thing, and I don't want to dwell on this for too long because we are well over time and we got another show to prepare for. But gold. Now, I was saying to Jeff, I've done some statistics on this. Gold tends to be the weakest in June. 29% is so 71% of the time gold will close beneath its open in June. Now, we may well have a buck of that trend. You know, it's not 100% of the time, it's 71% of the time. So this year may be the buck of that trend. But I want everybody to be a little bit careful when they think that they are just going to go out and buy gold and it's going to fly from here, because it is getting overextended. Now, all we need to see here to start to send maybe some tremors in the market with gold is something like this. Now, this is a daily chart. Now, you watch this level here, because what could happen is that we get something that looks like this. And you are looking for this to happen over a course of a day at some point. Let's extend this one out a little bit. Obviously, this will still be green. If you see something like that happen on gold, that is going to, and in these areas up here, then that's going to start suggesting that there is enough interest in selling this off to start pushing gold back to the downside. Now, it only needs to close beneath its open, and this is the open of the month. So if it starts to pop up here and give us a signal like this, we may end up just looking for this price here, but you are looking for the rest of the month potentially. So be very careful when you're looking at gold moving to the upside. It's very, very early in the story right now. You know, the FTSE 100.
Let's hope it keeps going. Let's hope it gets into a double top situation there.
Yeah, absolutely. What, up here, you mean?
Yeah. No. Higher still.
Even beyond. Yeah, well, you're absolutely right, because if it does keep going,
that'd be a nice sell there.
Oh yes, that would be an amazing sell, wouldn't it? You get something like that going on, then you may well be looking at a trade which leads us basically all the way back down to there, or you know, over the course of the month. Now that's obviously going to be red, so you could be looking at something like that. So let gold push up, let it kind of start to look like it's forming a high, because there's a lot of room. If the statistics actually work out, there's a lot of room between that point and that point. So just be a little bit cautious. You know, I'm not saying don't buy gold, but what I'm saying is look out for the signs and signals that gold is weakening, because it, you know, statistically it doesn't tend to do too well during June. We may well buck the trend right away across the board. This month, gold might do brilliantly well. The Aussie might do awfully badly, and everything is turned on its head. You know, in any year that Trump is in power, that's more than possible. But just be careful, I suppose, is what I'm saying. And
yeah,
certainly,
we're trading probability, not certainty. Simple as that.
This is the thing, and I think if you're looking at a price up here, you know, if gold does get up to that point, then I think it's going to be a really, really high probability trade that we at least sell off to a degree. Whether we end up closing above the open by the end of the month is another question, but I think there's a high probability that gold starts to weaken from 1341 and give a pretty decent trade to the downside. So that's just something to put in your back pocket.
Done. Zipped.
All right, buddy. Right. Well, I will bid you bon bouche. When are we back? We've got a few hours, have we?
An hour and 47 minutes from now.
Awesome. So 11 o'clock my time. I will see you then. Thanks for listening, guys. Thanks, Christo, for your involvement. And we will be back same trade time, same trade channel tomorrow.
Uru.